Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone. Thanks for joining us on the podcast today. We're going to probably have a hard conversation, I reckon. I've got someone in the studio here who's going to give us a real honest, frank assessment of the property market today from the front line, and the front line being those people who are selling it. As we talk a lot about on the Smart Property Investment Show, you can really understand market dynamics by the actions, activities, behaviours and the attitudes of real estate agents. And for property investors like myself, often real estate agents are my best friend and they're banging down my door trying to tell me about the next big thing. On the other side of the market, they don't want to know us, and particularly don't want to know buyers agents, because markets which are hot and they don't need to work as hard. But I think real estate agents having to work pretty hard these days. And Bill Tsounias, he's from McGrath, Brighton, Lee Sands, is in the studio to have a chat about what's going on. Bill, is it a good time to be a real estate agent?
I think it's just gone back to normal.
Yeah.
I think for a lot of agents are getting caught up with the head noise. You are working harder, but to say that you are working harder, it's just normal. Like last year, I could have had my 5 and 7 year old son sell a house $400,000 over reserve, where now we've gone back to one or two bidders. So I still think it's just normal.
Just normal. So talk me about McGrath, Brighton, in a sense. So we know McGrath quite well. For those listeners who, and there's many of you who aren't within, I guess, the eastern seaboard, so Sydney and up into Brizzy, McGrath is it's a brand synonymous in these parts of the world with quality real estate agents. And John McGrath, obviously well known in real estate. McGrath, Brighton, Lee Sands. You guys just big part of the McGrath family?
We were the first franchise to open, so we own 4 offices. So we have Brighton, South Hurstville, Sans Souci, and then Revesby.
Were you the first franchise for McGrath?
We were the first. Yeah, we're the first ones.
Oh, I didn't know that. Yeah. Okay.
So South Hurstville was Blakehurst. Yeah, Hurstville.
What do you call that part of Sydney? Sort of south, like
Revesby is southwest,
Yeah.
but we call it south. Yeah,
South.
Yeah.
And the market out that way at the moment for you guys. So you've had a good couple of years selling real estate. Now you're sort of...
We have to work now,
You got to work a bit harder.
I can't sleep in my car.
Have you all traded in your Maseratis, have you? And you're now driving Toyota Hyundai.
Yeah. The Ferrari's on carsales.com at the moment.
Yeah.
But
your suits are a bit cheaper, you know.
See, our market's very mums and dads.
Yeah.
Our Revesby market, what we're finding out there, it's a lot of new developments. So you're finding a lot of the mums and dads are building duplexes, and they were making a lot of money. It's slowly getting harder and harder. But ours, a lot of mums and dads, a fair bit of units, not so much off the plan. But just...
So you're a little part of Sydney?
Yes.
Well, big part of Sydney, little part of Sydney.
Yeah.
Do you reckon it's reflective of wider Sydney and out towards the suburbs or some of the other middle tier rings? And I'd say that's where you guys are. Like I'm thinking Strathfields and that sort of area. Is everyone hurting at the moment? Everyone doing it tough?
Yeah, I think we're doing it tougher than last year. Like our office has had the worst quarter we've had in the last 10 years.
By quarter you mean sales results, right?
Sales results, yeah. So, but when you're looking at it as well, the stock's been kind of dry as well. So your days on market are more, but if you do get the process right, we're still finding that our suburbs are still selling quite well, because we are the cheaper alternative to the east or to the inner west. So whoever can't afford the east or the inner west comes and buys where we'll buy in Arncliffe or Cogra or Carlton or anywhere close to a train line.
Yeah.
Our suburbs like Hurstville has been hit, the Chinese. So it just depends. Each patch is going one way and the other patch is going the other way.
And we're talking about a specific geographic area here in Sydney, but a lot of this stuff we're talking about is it's consistent right across Australia. So it's about markets in markets. And when you look at the area that you operate within, what sort of houses versus units going? Is it a disparate market?
Houses.
A lot more houses?
Yeah, a lot more houses.
So houses are selling?
Houses. So our average sale price for a house is probably, you would say anywhere between 1.2 to 1.4 in our area would be the average sale price for a house.
And that's holding reasonably firm on...
I reckon it's come back about 10%.
Okay.
Yeah.
And how about units? Are they sort of... There's a lot of units out that way as well, which would range from sort of old red brick type stuff through to
the new ones.
The new builds,
to your over $2 million ones. The units have... they've come back dramatically because what you're finding is with the financing at the moment, the Royal Commissions, the money's harder to get. Your investors are getting scared. We have a quite big rent roll. We manage over 1,000, so a lot of our investors are kind of clearing their stock as well.
Okay.
Because they're saying, what's going to happen? Is it going to get worse? Let's just move it. But I still think that even if you were to sell the investment, where are you going to put the money? Yeah. Unless you're putting it on your own mortgage, like.
You've got to put it somewhere,
You've got to put it somewhere.
Yeah.
So I think
you're not going to stick it in term deposits. You get like 1%.
Exactly.
You're getting, in terms of asset class, even though property has come off a little bit, and in some markets, some markets in Sydney which are still strong,
fine.
Still
I just
growing.
think it's normal. I think what we're finding is that the media is making it out to be this big thing when it's just gone back to normal. Like we're still getting 40 people through an open house in our 4-week campaign, where last year we'd get 120.
So you're still selling. So your days on market, and for our listeners, days on market is one of many metrics you can use to talk about the health of a particular property market. So days on market, if you put something up to sell straight away, it typically means there's a lot more buyers than sellers. There's upwards pressure on property. If days on market starts getting longer and longer and longer, and a property sits on a market longer, typically there's a couple of things. Either expectations around that property price is incorrect, or it's a dog and it's not presented correctly, or the market's completely stuffed and no one wants it at that point. So days on market is stretching out. Is it stretching out?
No,
quite a lot,
we're gone from like 23 to 30. So for us, it's still pretty good. But if it's not done right at the start, I think the issue is if it's not done right at the start, it's not going to work. If the agents are gone with a lofty expectation, or the owners have a lofty expectation, and they leave it 2 weeks, they're backpedaling to try and get it done. Where if it's done right from the start, we're still finding we're getting 3 or 4 bidders at an auction, which is a normal auction. It's not like GFC where we would be standing with the owner, like me, the other agent, the auctioneer, and the owner, just standing there looking at each other. You still got people wanting to buy.
So people are bidding. People are happy to buy. So the expectation around price then is what we're talking about. Is it the real estate agent's job, do you think, to actually give guidance to the seller, or is it the seller to sort of have an understanding or perception about what the property is worth and guide the agent? Which way does it work?
That's a good question. Well, put it this way, like as you said, I'm in the trenches. If you look at it, I think it's up to the agent. Like if we go week, like if I go back with our officers and we do about 60 to 70 opens during a weekend, but I think 4 weeks ago, 1 week we sold 6 out of 6, and then we sold 2 out of 4, and then the weekend before that we only sold 2 out of 9. But if you have a look at it, the other 6 properties, 5 of them had people bidding. So is the issue the market, or is the issue the agent not reflecting what the property is really worth, and the owner having to make a decision? Because there was a decision there to be made, and the owner said no. Why'd they say no? Were they informed or not? Who knows?
So there's a whole bunch of real estate terms, and we'll probably get around them. So we'll talk about supply as well. So supply is how many properties are there on the market at any given time. And if there's a heap of supply and not a lot of buyers, it means that days on market sort of extend. If there's very little supply but there's a lot of buyers, that means stuff typically sells quicker and for more. There's not as much supply in the market at the moment in the Sydney area, in your particular area. Is that correct?
There's just a little bit more than last year, but I will find that spring will have a lot more supply than what it did.
It will do. Okay. And what do you think is going to drive that, or will drive that?
I think the exciting thing for us at the moment, and for what we're finding for a lot of people, is people are going back to, wait a minute, we can trade up now. We can go from our three bedroom house and buy a bigger house, rather than going and renovating the house. It's that they can trade, and the anxiety's gone out of, if we sell, and if it goes up, if we do this or we do that. So I think it's gone back to normal, where people can have a look and say, you know what, we like this one, but if we miss out, something else is going to come up. Rather than saying, let's pay 500 over because the next one's going to be 600 more.
So for our listeners, property investors, buying in a softening market, which is often a good time to buy real estate to get the cheapest price possible. Obviously, investors want to try and get property under market value as much as possible.
Of course they do.
And how they play the real estate agent is a big part of that. So let's give some tools of the trade, some inside secrets around how to get the best out of real estate agents in a softening market. The best investors you see who get the best pricing, what do they do? How do they work with you?
They're just pretty straightforward. They're straight to the point. Like I think that my opinion is that it is still a really good time to buy, especially units. Like in our area, units have come back dramatically. And when I say that, I think they'll overinflate it to start off with. So they've come back to normal. But the buyers that are forthcoming and not playing a game of let's lowball at 50 grand extra and play your unders and just say, this is what I want to pay. This is it. Take it or leave it. And that's the way you like to operate as well. And the people that come in and go, low ball it by 100 grand, do you just go,
go away, not interested.
Most agents will get the shit and say piss off and not call them, and it'll get them on the back foot.
Yeah.
And they're like, I don't want to deal with this bloke. This bloke's gave me $100,000 extra less. Why would I deal with him? But I think the people that are more forthcoming and want to work with the agent, because the agent wants to get the deal done as well.
Well, that's how they get paid.
Yeah, exactly. But they got to work for the vendor. Yeah, the ones that are most forthcoming are the ones that will win.
And you're one of the better agents in town. You're part of the top 100 agents, RB top 100 agents. What number did you come?
80 something.
Okay, that's pretty good. So this is the benchmark ranking for real estate agents in Australia. The REB top 100 agents. I think McGrath does pretty well in it. I think you had sort of 30.
I think we had 27 out of the 100 were from McGrath.
So doing pretty well. You're well represented. What makes McGrath agents better than everyone else, you reckon? Is it just the markets you operate in, or is it you got better skills, you're nicer to deal with?
Oh, that's a good question. I think, the training's a lot better at McGrath. I think the consistency is a big thing. I think still in the marketplace, whatever's gone on with McGrath and whatever's in the media, it is still a very trusted brand.
I agree with it. And, I move around real estate markets quite a lot, and always hear the McGrath to my original points. But we're chatting about how to work with the real estate agents most effectively, and you said people lowball and doesn't really piss you off too much. What pisses you off as a real estate agent dealing with buyers? There's got to be something which really annoys you. You've got to give it away.
After 14 years, I think you see all of it. Like you just get used to it.
Do you just shake your head sometimes and go, these people don't know what they're doing?
Yeah, sometimes, especially the ones that are so gung-ho and then for some reason get cold feet and they keep chasing the market and they eventually buy something they don't want. So I think for an investor at the moment, I think if I was looking to buy an investment, it would be time consuming, but I would rock up to most auctions on a weekend in the area that you want to buy, and the chances are one of the properties which the agent has overquoted, or he's been too bullish, or he's just lied and said there's more buyers than there is. The owner's going to have to make a decision, and it's going to sell for a lot cheaper than what they're saying, and then you might be the lucky person sitting there buying it. So rather than having your eyes on one, having it on 4 or 5 at a time and not getting too emotional on them is a good thing.
So be pretty pragmatic then. So be prepared, have your money ready.
That's it.
Have your pre-approval ready and just
go for one of them.
Go for one of it.
Yeah.
So is there a lot more auctions at the moment, or auctions are drying up and it's mainly sort of private treaty?
Our area is still really
it's an auction
driven, but what you're finding is a lot. We're going more towards what the inner west is doing, which they're selling in prior, like really compression selling, like boom, 1-2 weeks.
Can you explain that, compression selling?
Like literally selling it in 1 week or 2 weeks, getting
prior to auction.
Well,
so you list it for auction, but then if a good buyer comes in, you'll grab it.
Yeah. So we don't really normally do that. We would run the process straight through. But what you find now is, and what the investor needs to know is that the agent might get a bit jumpy, and if the owner's jumpy as well, if a half decent offer comes their way, they're just going to take it.
Yeah.
So they might say we're not selling before auction, but then they will.
Then they will do it still.
And they'll do I'm sorry, they walked in the office and
No, so buying at auction though, in a market that you've just explained, where you might get lucky, right? How do you go about doing it? Like, did you use any particular auctioneer in your neck of the woods? You use a whole bunch of different auctioneers?
We use Nathan Gallagher and Stu. We can only use McGrath auctioneers.
Okay.
Yeah.
And I always ask auctioneers these questions because they're quite interesting characters and they've got a thing. But how do you buy well at auctions in a softening market? Should you be putting in the first bid, going big early and trying to scam people off? Is that the way to go?
Yeah, I would. Yeah. I would be more aggressive than ever.
Yeah.
Because what you find, the other buyers would be like, oh, wait, this guy's not going to stop. But it all comes down to if someone's got more money in their pocket than you do, they're going to buy it. But my advice would be, to go hard.
What do you do when that sort of real estate agent's sort of sitting on your shoulder going, bid more? Don't listen to them?
Just laugh. I don't know.
Are you that guy? The younger blokes in the office do that for you, do they?
Nah. See, that we actually bid for a lot of people. Like I would probably buy 60 to 70 houses for our clients a year and go bid.
Okay.
For the actual buyer. So if you can find an agent that will do that for you, that's a good thing.
Also, that you use them as a buyer's agent.
I just go bid. We don't charge them anything.
Yeah.
It's just something that we go do. Yeah.
Okay. And at some point in time, you'll probably sell their property.
Yeah. Exactly.
Okay. So that's the way it works.
Yeah.
Okay. How do you know if the price is right then? If you're bidding for a particular property? When do you know that it's reached at auction, that's reaching the point where it's probably at market, or you never know because it just depends on the day?
Yeah, that's a good question, eh? It just comes down to, if it's an investment, it's always you got to draw a line in the sand. But if it's not, and it's an emotion, and they've been looking for
Very
that
different.
long, if they want to buy the house, and that's what we say, you can find something cheaper if you want, but if this is a house you want, buy it. If you don't like, all good. But if it's an investment, it's got to be like a line in the sand.
Yeah. And dealing with agents, going back to it, are most agents pretty good, or are they all sort of, the reputation of real estate agents sits somewhere with, I don't know, used car salesmen or
thank you.
whatever?
Yeah.
I know a lot of good agents, so I'm a big advocate of real estate agents.
That's all right. Thank you.
Yeah, no.
I'm
what
finding
do you reckon?
they're getting better.
Yeah.
I'm finding the lies are not coming out so much. And when we're buying for clients, like, you can tell straight away, like, oh, we've had an offer, but they can't get their finance. That's just like 101. They've got nobody.
Yeah.
Like, yeah.
So you know all the.
Yeah.
Do you invest in real estate yourself?
Yeah, I have. Yeah.
Do you like it as an asset class?
Yeah.
Yeah?
It's all I know. So yeah.
How'd you end up doing what you're doing, by the way? How'd you end up being a real estate agent?
I wanted to be a valuer first, and lucky that I had to do my real estate course before I did the valuation course at TAFE, and then in between that, I just got work experience at an office near my house, and I've never turned back.
So it's all you've known is being a real estate agent.
Yeah.
So how long are you going to do this for? Is it just a career for life for you? Is it?
Yeah, I enjoy it.
Yeah.
Let's see how long it takes till I burn out. But
Yeah.
I like it.
What do you like about it? Just the deal?
I like the chase more
Yeah.
than anything else, and I know some agents will come in and say, I like dealing with people's biggest assets, whatever. But I like the chase and helping people buy something. And it's good when you help people buy something because you're on the other end and you can give it to the agent.
Yeah.
Then,
So when you're looking to sell an investment property and you go, okay, I'll sell it via an agent, via trying to do it myself, and a lot of people go down this sort of for sale by owner stuff, and it's that has its own set of challenges. So if you go, okay, I'm going to use real estate agents, lots of different real estate agents out there, and you might get 2 or 3 of them come in to do a presentation to you why you should choose that particular agent.
Yeah.
Called a listing presentation. And I imagine a lot of our listeners have been there, and they get these people coming in telling why they should be choosing them.
The diagram.
Is that the chase? Do you like that bit of the chase? You like to win the work from the actual vendor versus selling the property? Because there's 2 sales you need to make, right? You need to sell to the vendor to choose you, and then you got to sell their property.
I think the market's changed, where what you're finding is that because there's a lot more younger agents in the market at the moment, you're finding that it's a lot of relationships now. So like, you're not going to get a lot of presentations. Not many people are going to call 3 in. They're going to call 2 in because, I don't know, Alex, for example, has been calling him for 4 years, and Bill's been calling him for 4 years. So there's a relationship there. So I'm finding a lot more. I don't go to too many ones that are cold anymore, because a lot of the agents are really proactive with their CRM systems and their follow-up and calling if anything what comes up and sells, or if they're good with that stuff. So most of my business is I've been speaking to them for like 4 or 5 years, 10 years.
How many phone calls would you make a
50.
week? A day? 50 a day?
Yeah, outgoing.
50 outbound calls a day. So is that 50 connections or 50 calls?
Just calls.
4,
yeah.
okay.
Well, the new agents will be doing 100 a day.
100 a day.
Yeah.
So if you're one of those people receiving a phone call from an agent, and you might be cultivating a relationship for 4 years with someone. So if you're selling a property, Bill calls you, how you going? What's going on? What like the purpose of those calls?
Basically, this one's sold. Come to the auction. We got an auction here around the corner. Just see this one sold. We had 20 bidders here. We had this here. We had that. We had that there.
Yeah.
Yeah.
So if you're receiving those phone calls from an agent, it pretty much says to you as someone that might sell a property at a point in time that the agent's involved, they're connected, they know their market. So that they're all good things, because a lot of people get annoyed by getting called by an agent.
It's what you say and how long you have them on the phone. Like if you're just calling and saying I'm touching base to see how everything's going, like you're not going to get much, are you?
Yeah.
But
so they should have a bit of information for you, saying, hey, look, the house behind you just sold for this much.
Yeah.
You think about listing, do whatever.
Yeah.
But is it different working for owner occupiers than investors when you're selling their property?
Yeah, very different. A lot more less emotion. A lot more it's just come down to dollar and cents. But a lot of the investors, I find a lot of investors are doing it wrong as well, where they're just putting the property up for sale with the tenant in there, or it's just not looking its best.
Okay. So you reckon you punt the tenant normally and
I would
dress it up? If it's
I would punt the tenant and dress it up. Yeah.
Yeah? Okay. So a lot of people would say that.
And I would give that advice strongly.
Really?
Yeah.
Because a lot of people think, oh, look, it's an investment property is more valuable if it's got a sitting tenant in it at the point of sale. But, you know, I guess you got to weigh it up if you have the place empty for a month, but you can spend a few bucks on some paint and some carpet, or, you know, you can lift your... And does that matter whether it's a softening market? Like, because most people go...
I think it'll have to happen more now. I think
Okay.
like if once the market softens, you're gonna have to do it. Get them out, put the rental furniture in there, paint it. I wouldn't go too hard. I wouldn't do kitchens and bathrooms and all that, but make it present a lot better.
Mm. And do you think if you're listing a property for sale as an investor, normally the way it works is that the real estate agent gets a cut of the sale price, but any sort of marketing, is that normally absorbed by the agent, or you might need to pay extra, like vendor paid marketing?
It's all vendor paid marketing.
Okay.
Yeah.
So if your agent says to you, look, I'm X% of the sale price, but you need to spend 10 grand on advertising, is that a big amount? Would that be a lot?
It just depends what kind of investment it is.
Yeah.
Like, put it this way, the rule of thumb, about 5 years ago, whatever, like it was 1% of the property's worth we used to get in marketing. So if it was a $2 million place, we'll get 20 grand. If it was a 1 million, you get 10. But because now the print media, people aren't too fast on going into print media now. It's getting cheaper. But your real estate and your domain, your premium listings are worth it's worth $3 grand to put it on just there.
On a premium listing for
real estate and domain.
That's a lot of money.
It's a lot of money.
What's the cheapest listing on a real estate?
We don't do them.
Okay, you only do premium listings.
Yeah.
Okay, so when your agent says to you, oh look, I'm going to take this as a percentage, but you need to spend $10,000, $20,000 on marketing. You do that because it helps you secure more potential buyers and therefore
a better price.
Right?
Yeah.
That's the logic. Yeah.
But it just depends. Sometimes 10 per grand could be overkill. Sometimes it couldn't. Like for a unit, I wouldn't be spending 10,000.
Do most people get that though? Most vendors understand that.
They do now.
Yeah, they do.
They got it's anywhere between like 4,000 and 5,000 for a unit, which is a lot of money to spend.
It is a lot. When you spend that, for a unit, you could paint it for that much, or
exactly
put new carpets in, right? And I guess that's a balance off as well, right?
Exactly.
Yeah, that's cool. All right, so we have to wind up. We're running out of time, but the market's not stuffed. It's just the market.
The market's just the market, with the lending and the Royal Commission now. But I still think there is still good buys to be there. Do you wait for better? Who knows?
Yeah. Is it the bottom of the market in Sydney yet? Too scared to say?
I don't think so.
No.
But if you're investing, it doesn't really. If you got to hold it.
Yeah.
I'm still a big fan. Anything close to a station, close to the city, still going to do well. So if you find something you like, buy it.
There you go.
That's it.
Advice from Bill.
Thank you.
That's cool. Okay, good. Mate, you've given lots of information, Bill,
pleasure.
around just how you see the world in a very relaxed and frank way, which is what I like.
Thank you.
Your biggest tip then, let's finish with this, for buying property in Sydney in a softening market, the one tip.
What I said before, you're going to have go look at a few of them and earmark them. And whichever penny drops, you buy.
You buy.
Yeah.
Okay.
Because you'll be opening the paper and one of them that they've told you it's worth, going to go for 1 to 1, one sold for $9.50.
And you want to be that person.
Yeah.
So you actually got to turn up, right?
Yeah.
You got to not be hungover and go.
No, don't worry, let it go.
Yeah. Let it go, because the lucky ones don't always come up, and
No, they don't.
and some of the best stories I hear about people doing well in real estate, they've just been really
They've rocked up the auction.
opportunistic and just gone.
Yeah. Oh, okay.
I was just out getting a coffee and I saw a place that no one was bidding. I went, oh yeah, sure,
Yeah, that's
no
it.
worries, But they're ready.
They are.
Yeah, they're ready. Good, be ready. Bill Tsounias, I think I got that name right because I practiced it beforehand, and it's actually a lot easier to say than what it looks, because it starts with a T, but I actually made it phonetically. And McGrath, Brighton, Sands, and you were number that 86.
Yeah, I
on
think
the top
so.
100
Yeah,
agents, which is cool.
Thank you.
It's a huge accolade.
Thank
to
you
get
very
onto that
much.
thing. I've seen the peer group you're with on that, and to crack that 100, you're doing well, mate. But thanks for your time. Thanks
Thank
for your
you
insights.
very much.
Good one. I hope you enjoyed that. insights from an agent and softening markets, and we'll look to cover some more of this stuff off. And I concur with Bill's positioning around, the best deals in real estate are often those when you're just being pragmatic or being opportunistic. So if you're not in the game, you're never going to win the game. So, it's always good to play a game also that you can control. And if you're there, if you're at auctions and, no one else is bidding and someone needs to shift a property, you could be that person. So get out there and enjoy. Remember to check out smartpropertyinvestment.com.au. If you're not subscribing yet to our daily morning market intelligence, so you're the first to know what's going on in property and property investment right across Australia, like hundreds of the thousands of other Aussies, smartpropertyinvestment.com.au/subscribe. And please keep those reviews coming on iTunes. We do appreciate them. If you want to contact the team and any questions, even as for Bill, happy to flick on his details, editor at smartpropertyinvestment.com.au. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.